Welcome to step number 1 of the Invest with Teri method, picking good companies. When I first started trading, the market was going up. The last 10 years or so had been just a up market, bull market, and there was a portion in there where the market consistently went up, but I was just making trading too difficult. I kept picking these companies that weren't the best in their sector, picking companies that I felt like were the diamond in the rough, instead of picking the best companies that would have just made me income without question. So here's some criteria I'm now passing down to you so that you can make this process so much easier. When I'm picking companies, I like to look for 4 different things. The first one is it a healthy company? The second one, does it move at least $1 a day? The third one, is it best in breed? And then the fourth one, has it been going along with the overall market? So let me explain those. First of all, is the company a healthy company? When you're looking at the company, does it have good reports for the future? Does its forecast look good? Does it seem like it's going to be a company that'll be around for a long time? How do you know? Here's a couple ways. One, go into the CNBC app, the same one that we talked about with the watch list. Go into the CNBC app, scroll to the bottom, and I want you to look at some of the news. What is the company's news saying about it? Has there been new staff members, maybe a change in CEO recently? Have they talked about new expenses that are coming up? What does the news say about the company? The next thing that you can look at is their earnings report. Once a quarter, so 4 times a year, the public companies will tell you how they're doing. They'll tell you about their revenue. They'll tell you about their earnings. Earnings is revenue minus expenses. So if the earnings is low, that means they have really high expenses. And they'll tell you their forecast for the future. When you look at that earnings report, and you don't even have to look through the whole thing, you can even look at the snippets on the CNBC app or Yahoo Finance or Bloomberg. Just, Google last earnings for this company. What did they report? Because they're gonna tell you what they're thinking about the rest of the year. Maybe their supply chain is down. Maybe they've lost one of their partners. Maybe one of their staff members is changing out. Maybe their competition is changing. Those type of things will show up in that earnings report. Another thing that you can look for in terms of, is this a healthy company? Look at its competitors. So in Yahoo Finance and in CNBC, when you scroll down to the bottom of a company, like you put in their ticker symbol, scroll to the side or to the bottom, it'll say other companies that are similar to them. I want you to add those companies to your watch list. And over the next couple of weeks, just watch how the stock price trades compared to those companies. Is it lagging? Does it move in lockstep? For example, I think about the airline industry. When I first was looking at airlines, my favorite company to look at was Southwest Airlines. Their ticker symbol is LUV. But what was crazy is their stock was not doing well at all. What I realized is that Delta and some of the other companies like United Airlines were actually doing much better than them when I looked at their stock price. So looking at those stock prices in comparison to others will help you. Since then, Southwest has done much better, but oftentimes, like I fly American Airlines, but I would notice that although I fly American, their stock price wasn't doing well. So it's important to say, is this an actual healthy company? Last part of the healthy company is look at the stock and see, has it been on the uptrend I want you to look back in some time, maybe even look at the last year or two, even 2-3 years. Open up CNBC. There's going to be a chart there, and we're going to go much more into charts in the rest of the program. But there'll be a chart, and it'll look like it's either going up, sideways, or down. I want you to make sure that the stock you're picking has been going on an up trajectory, especially since most likely at this point in your journey of trading, you're going to be entering the trade using a buy order. So you want to buy low and sell high. That means that you want to make sure that the stock has been going up, and it will continue to go up after you get into it. So it hasn't been on an uptrend. That's also another sign that it's a healthy company to trade. Next, does it move $1 a day? The reason why you want your stock price to move at least $1 is because you're a trader. A trader means that you're investing in stocks for income. It'd be like going into a job and them telling you that your salary is 50 cents an hour. What? You can't make money with 50 cents an hour? Same thing with these stocks. If your stock isn't moving, then you can't make money. So I need you to make sure that your stock moves at least $1 a day. How do you know? This first part is heavy on CNBC. They're just a good company, like a good financial news company. Say when you pull up the stock, one of the things it's going to show you is the open price and the close price, and it'll show you how much the stock moved today. As you're watching them, watch them for about a week or two. Does it move at least $1 on a regular basis? Another way to find this is a study called the average true range. When you're looking at the stock chart, you can actually go up to studies, and one of the studies is going to say ATR, average true range. That tells you over the last 14 days, what was the average move of your stock? And if it says $2, $5, $6, $1, then you're good, because that means on a daily basis, your stock has moved an average of the ATR. As long as it's above 1, you should be fine. Another reason why I like to make sure that the stock moved at least $1 a day is because I had a goal when I first started trading to make $300 a day. If I could make $300 a day, then that would replace my income as a teacher or assistant principal. My average income was about $4,000. So I wanted to make sure that I could replace that. If the stock moved $1 a day, that means I could get 300 shares, and on an average, I'd be able to make my income goals. The next one is you want to make sure that your company is moving in the same direction as the overall market. So if it's the Dow, the S&P 500, look at those first. How have they been moving? If they've been moving, full steam ahead, price is going up, and then your stock's been falling, something might be wrong. Maybe don't pick that company. On the flip side, there's been some times, like I remember in 2022, there was a bear market and all the tech companies were falling, even though they were doing phenomenal. Their earnings were great, their balance sheets were great. They were making all this cash, but their stock prices were still falling. In that time, you could also see a fall in the overall market. The S&P was down, the NASDAQ was down. So it made sense that the companies were falling even though they were healthy companies. So just make sure that your company is in line with what the overall market is doing. How do you do that? Go to the SPY. Remember, that's the ticker symbol for the ETF that follows the S&P 500. Look at their chart. What has it been doing lately? Then go into your company and look at its chart. Is it similar? Has it been rising the last 3 months the same way the S&P has been rising? Or has it been falling the last 2 years while the S&P was just going straight up? Make sense? So check the overall market versus your company. And then the last one is best in breed. Best in breed means when you look at the competitors of this stock, other companies that does what it does, is it truly the best? Now, I know some of you guys started immediately thinking about cell phones and you were like, Apple versus Android, it can be a flip. I get it. But there are some sectors, think about cars and electric vehicles. There are some companies that are ahead of the rest in electronic vehicles. Maybe you think about healthcare. There's some companies that have had some medicines coming out soon, and those companies are doing well. One way to check that is there are ETFs that are following sectors. You all learned about that earlier in the program. Look at those sector ETFs and see where are they most heavily weighted. When you look at XLV, that's the one for healthcare, it's gonna then show you where we're actually investing in healthcare and which companies are most important. Choose that one. Don't try to be fancy and figure out some special thing that nobody else knows. Choose the one that everyone is investing in, and that will help you make money faster. Does that make sense? Pick the best in breed. I hope these things have been helpful, these 4 criteria. I'm actually going to quiz you, so be ready for the quiz. But once you pick the right company, then you can go into step number 2, which is picking the right price to invest in that company.